Okay, folks, welcome to Swing Trading today. This is Bob Desmond at the Contrarian Trader, and let's kick things off with the dollar. Yesterday we had the FOMC minutes, which initially caused the dollar to rally, but it ultimately faded, and there's no shock here. And the reason why is that the dollar was weak for most of the week, pardon the pun, in that we put in a lower high, the prior high being on the second, and this is a 4-hour chart if I didn't say that, my apologies, and the lower high being here on the 5th. And then when you fast forward to the 9th, we broke down below the lows of the 3rd. So that's a confirmation breakdown, lower high and now lower lows. Fast forward to yesterday, the 10th, and we flashed an outside reversal bar when the markets opened up yesterday. Initially, we rallied and then outside reversal bar. So bad stuff for the dollar in that we have broken down below a key support level and we are flirting with another. Now, what's surprising here was the price action of gold. Gold, which was firmly above the 1310 level yesterday, it broke down below not one support level, but two support levels. Now, we are attempting to consolidate here this morning, and I'm not going to be the least bit surprised to see a rally back and an effort to recapture the 1310 level, but I'm not going to be comfortable with buying gold until we are back above the 1310 level, and I am long-term bullish on gold. And the reason is that yesterday you had the CPI data which came out weak. That's a consumer price index. Today we had the PPI that comes out. And let's face it, granted, the Federal Reserve says they like to back out food and energy conveniently. But when you take a look at the chart of crude oil prices, you'll understand why they want to back out food and energy, because energy is just on a tear, ripping higher. So we do have inflation in the system. Even when you pull back to a weekly chart, you can see that so far this year, we are up around 45% on the price of crude oil. But don't look at this chart. The Federal Reserve doesn't want you to look at that chart because they want you to believe there's no inflation. So crude oil, since we're on this chart, pulling back, we'll probably do a retest of this lower band of support. Let's go to the chart of the S&P 500 futures. It looks as though we are going to push higher yet again this morning. We have higher lows. Again, we're back on a 4-hour chart. And we are going to press above, or at least attempt to press above, this upper band of resistance here. RSI is improving. Remember the other day we spoke about how RSI was sending us a signal and that we were putting in lower highs, and I warned of a breakdown to lower lows, and we got that, and we pulled back to recover and find support at the 2876 level. So watch that level. If we fail to break out here on the S&P 500, watch this support level, because if it breaks, things are going to get really ugly really fast with program selling. So let's memorialize this support level. And there you have it. We extended the line left to show prior support as well. But so far this morning, things are looking good for the S&P futures. The NASDAQ 100, we're down slightly this morning. We did break down below support. Again, I spoke about this the other day. RSI was putting in lower highs. We did break to new lower lows on RSI. We have since recovered. We are now back to putting in higher lows. We have regained momentum. And yesterday, we were able to put in a new weekly high. So the NASDAQ still looks good. Let's leave off with a chart of Bitcoin. Again, a 4-hour chart. Obviously, a nice trend higher here. I did one the other day about RSI. RSI had put in a double bottom setup, and I was watching RSI from a higher level view as well. We were trending higher, yet we were putting in lower highs on RSI. So RSI was not confirming the move higher on price. So that's the market sending us a signal that, you know what, Bitcoin may be losing a little bit of momentum here. Yesterday, we surged higher. However, sellers moved in, booking profits, and now we are trading down below the lower band of support. So we may see some continued weakness on Bitcoin in the very short term. Longer term, I think it's going higher. So my early warning signal for Bitcoin is to watch for RSI to begin to show signs of strength. Right now, we're seeing lower highs and lower lows, so I would avoid. Let's go to some member stock chart requests. We'll begin with the EDC, the Emerging Markets Leveraged ETF. This is a daily chart. I spoke about this chart over the weekend. I like the setup here. We have broken out on a daily and a weekly basis on the EDC, and we're looking to put on a trade here to the long side. In fact, let's take a look at the weekly chart as well to illustrate my point. Okay, so here's the breakout. We broke out last week on price. This week, we have confirmed the breakout point. You have Stokes, which are hooking up. RSI hooking up on a weekly basis. 2 trading days left to go here, but so far this week, we are looking really good. Volume's a bit light, but overall, a very, very good chart on a weekly basis. Back to the daily chart, a clean breakout above resistance on the 5th. We've been consolidating. Yesterday, we began to push higher. A bit of a doji formation. Yesterday, sign of indecision. But I think that we're going to press higher. Watch the dollar and watch yields. A decline in yields and a decline in the U.S. dollar will cause emerging markets to rally. Nugget. This is the leveraged ETF putting you along with the gold mining stocks. We booked profits twice already on this. We booked profits last week and then into this week when we bought back our position or a portion of our position. And we're just watching it right now. I was disappointed with the price action yesterday in that we reversed to flash a bearish key reversal on the day, an outside reversal day as well. And we're flirting with the 50 and 20 period moving averages. So with the dollar weak, I'm rather surprised to see the weakness in the gold stocks. And not to mention, we had gold, which gave up its 1310 level yet again. RSI putting in lower highs. So I'm concerned here with the price action on NUGT. So I'm satisfied with the fact that we've booked our profits twice here, and now we're sitting in cash. Ideally, we'll get in at a better risk-reward level. And have no doubt, if we begin to break out on a daily basis, we will be looking to buy that breakout. I'm very bullish longer term on gold and on the miners. But in the short term anyway, they're looking a little bit weak here. So I'm sitting and watching for better price action. Xilinx is a member stock chart request. A very nice chart, a bit extended for my taste here. We will probably move higher. The path of least resistance is definitely up. Our forward-looking momentum indicators are all going in the right direction. Higher lows. Let's go to a daily chart. So yesterday, they broke it out above the 130.57 level. But you did see sellers move in to take it off the highs of the day. So you have some profit taking going on here on Xilinx. But net, it looks as though the path of least resistance is to the upside. As long as we continue to put in higher lows and higher highs, we can't argue with the chart. RSI pressing higher, Stokes pressing higher, no negative divergences with the exception of Ultimate Oscillator, which is putting in lower highs. Volume yesterday was good. So net bullish on Xilinx as long as the markets stay in an uptrend. And that is it for this morning, folks. Everybody have a profitable trading day, and I'll talk to you soon.